Are you ready to take control of your wealth and design the life you envision for yourself and your family? Welcome to Wealth of Insight with Austyn Whittenburg from Whittenburg Wealth Partners. Austyn guides you through the entire planning process to help you build a plan that seeks to protect your financial future. He empowers you with creative investment opportunities and planning ideas to help you understand and achieve your long-term goals. It's time to gain confidence in your financial future. Now, onto the show.
Many people will tell you that life insurance is just for when you die. But while there is more to it than that, insurance can be daunting. Term, whole, indexed, variable. What's the difference? Does it matter? What would be right for you? Well, your host, Austyn Whittenburg, has a guest this show who will help break down the mystery that is life insurance. So, Austyn, why don't you tell us about Andy Brim?
All right, we've got Andy joining us today. Thanks for joining us, Andy.
Thank you for having me, Austyn.
So Andy is the regional sales vice president with Dixon Wells, and he is my go-to resource for all questions life insurance. Anytime a client needs life insurance, we lean on Andy and his team to run quotes, survey the landscape of the marketplace, and figure out what's going to be best for our clients. So Andy, why don't you give us just a minute or two on your history, how you got into the insurance industry, and a little bit about Dixon Wells.
Yeah, thank you. Thank you, Austyn. As Austyn mentioned, I do work with Dixon Wells, and Dixon Wells is a independent life, long-term care, and disability insurance brokerage agency. We work with financial advisors throughout the country. Most of them are independent financial advisors. However, we do work inside of some banks. I tell people that we are what I would call a solutions-based provider of life insurance. And what I mean by that is when Austyn comes to us with a situation from one of his clients or prospective clients, our loyalty is with Austyn and with that client. While we do work with a number of carriers, and we work with carriers that probably everybody on this podcast has heard of, the Lincolns and the John Hancocks and Prudentials of the world, at the end of the day, what we're looking to do at Dixon Wells is try to provide Austyn and his clients the best possible solution, regardless of where it comes from. So I like to tell people we're very carrier agnostic, just looking for that best solution. I have been in the financial services industry for nearly 30 years. And when I say that, I have a hard time believing that, but that is absolutely true. I have been serving the role that I am currently in as a life insurance brokerage wholesaler for about 15 years. So about half of my career in financial services has been spent helping folks like Austyn and his team there out with their life and LTC and in disability insurance.
Awesome. Well, and we'll probably ought to have a whole other episode on disability insurance, probably long-term care, right? So you may be a frequent guest here, but I thought we'd start with life insurance. Everybody knows somebody who's tried to sell them some life insurance, or they get some through work. There's just a lot going on in this industry. And, you've got the Dave Ramsey's of the world that are, buy the cheapest term you can get and invest the difference. You've got other companies who are promoting some of the type of products Patrice mentioned there in the open, whether it's whole life, indexed life, variable universal life. There's a lot of jargon. So we're going to try to keep this episode at a jargon minimum, but this insurance industry is just really broad, and each client situation may call for a different approach. And that's really why, we approach this with the heart of a financial planner. I think sometimes people think of the old insurance salesman in the fancy pinstripe suit with the slick back hair, trying to sell the biggest possible premium they can sell, right? But we're really out to figure out what's going to be what's in the best interest of our clients, which is really why we like to lean on you. So why don't we start with the business that advisors like myself are bringing to you and to Dixon Wells. What sort of mix do you see between term versus some of these other more permanent products?
Yeah, and that's a good question. And I think that, obviously a logical place to start is with term insurance. I think most folks, when they begin to look at life insurance as a solution they need to get, they look at term, because term is the most inexpensive form of life insurance. What's interesting about term is that marketplace as a whole has really evolved really at light speed over just the pandemic. And I think what we've seen in the term arena is a lot of carriers have really become a lot more accessible from an underwriting standpoint. We've seen a lot more cases go accelerated underwriting, and we've seen the term marketplace really pick up a lot of steam. I would say that from a business percentage standpoint, we probably get 60 to 70% of the business that we get here at Dixon Wells from term insurance. Like I said, it's a product that really lends itself well to people that are just looking at life insurance as something they might need, whether it's a young family just starting out that wants to protect an income or make sure that their children are taken care of if something should happen. Term insurance just really seems to be the way that people kind of get started with life insurance.
Yeah. Honestly, it's probably the way that it's definitely where we start, right? Where I'm a big advocate of having life insurance. I think most people are underinsured. They take whatever they get from their job, which is, I don't know, maybe 2 to 3 times salary. Maybe they can buy a little bit extra, but there's not a whole lot of thought into how much do I really need, and some of those kind of things. So we'll get into that later, but term is definitely, where we see it's just simple, it's easy and cheap, right? So it's just really simple and cheap. So it's a good place to start, but so that leaves 30 to 40% of the business that you're doing in some of those other products. So what uses are you seeing when a permanent product comes up? Because, candidly, it's going to be a higher premium. The expenses are going to be higher. How are you seeing those products used?
Yeah. And that's another marketplace that's kind of evolved at light speed over the last few years. Those products are primarily used to provide your clients with a death benefit that they can't outlive. That's the purpose of permanent life insurance. Whereas term is for a certain term, just as the name would indicate, 10, 15, 20 years, whatever it might be. Permanent life insurance is something that you want to put in place for the rest of your life. Generally speaking, when we design a permanent life insurance plan for our advisors, we'll design that plan to run to the client's age 105. And people always chuckle and say, well, there's no way I'll live to 105.
Almost
but,
everybody says, I hope not, right? I don't.
Right.
I hope not.
So we want to make sure. We have our bases covered. I had said that marketplace has really changed over the last few years, and it has. And what I mean by that, due to the prolonged low interest rate environment, life insurance companies have really changed their permanent product offerings. So there's a number of different options out there when it comes to permanent life insurance. The best advice I can give people when I'm, whether I'm at a cocktail party or whatever it might be, and people ask me, what they should do when it comes to life insurance, if they're looking for a permanent solution, especially, is it's vitally important that you sit down with your financial advisor, sit down with somebody like Austyn, and have the conversation. You always want to find out. I tell everybody that I speak with about this. You want to be able to find out what your need is and sit down and have that conversation with the financial advisor. What is the need that we're trying to take care of? And then what our budget is. Because just like you mentioned, Austyn, term insurance is cheap. And it's great because it's cheap, but it only runs for a term. So if you're looking for that permanent solution, there's a number of options out there, but it's got to fit within that budget of yours, obviously. And that's where a good financial advisor like Austyn is vitally important.
Yeah. And, when a new client hires us, one of the first things we do is review the insurance that they have. And a lot of the times, and I think a lot of people have had experience with this, that when they were young, they went to a seminar, or somebody came and medical professionals presented at their school, and they sold them this product that, was, for lack of a better word, guaranteed, right? Or they made all these, ran an illustration and did all this stuff that made it look like that insurance was the best and only solution to fit those needs. And what we're finding more and more is clients like some flexibility. They want better access maybe to their funds or whatever it may be, that approaching it from that planning standpoint, figuring out what's going to be the best. Maybe that's a combination of both, right? So I've got a number of clients that have said, look, I've got kids at home. For the next 20 years, I'm in the prime earning years of my life. I may need $3 million of coverage or whatever the number is, right? That's depending on their budget and situation.
Mm-hmm.
So I need a lot of insurance right now, but going beyond that, I may not need as much. So why don't we look at 500,000 that I know is going to be in force forever, whether I die at 40, 50 or 95 or 105. But while my kids are at home, my spouse is going to need some extra to take care of it. So it's having those kind of conversations that's more, just putting it back on the client and what's going to be in their best interest, as opposed to, if insurance is the only arrow in your quiver, you're trying to jam as much money in there as possible. So,
right.
Do you see other, is that a pretty common approach that you're seeing? Sort of that.
It's a very common approach.
Some term, some
it's
permanent.
Very common. It is. And, having worked with you, I think you know this, but when we do have the initial discussion, and if the solution we're looking to provide you and your client is going to be a term insurance policy, oftentimes what we'll do, especially for younger clients that are just starting out, have younger children at home, is we will look to put in place a term product that has very good conversion features, so that as their situation changes 10, 15, 20 years down the road, they have the ability to convert that term insurance to permanent insurance. So we want to give you and your clients options. So yeah, the scenario you just described is very common. The only thing I would add to that is you brought it up just a few minutes ago. Unfortunately, and I'm sure you've seen this with a number of your new clients and prospective clients, the vast majority of life insurance policies that are sold throughout this country, once they're put in place and once they're sold to the client, the agent oftentimes disappears or doesn't really update the client as to the situation of that policy. And that is vitally important. And I really feel strongly that financial advisors are doing their clients a disservice if they're not at least asking about their life insurance coverage, and then hopefully taking the time to do an analysis of that policy and make sure it fits within the plan that you're putting together.
Yeah, life insurance, and similar to a financial plan, it's, we have you guys prepare all these pretty illustrations of how these things can work. We choose an assumed rate of return on the permanent side of things, right? We think this policy will perform at this rate, but the reality of it is, as soon as the client walks out the door, that illustration's almost invalid because things have changed, right? And so it really does require that maintenance and checking in each year, right? And so as much as this is a life insurance discussion, I really try to, every life insurance discussion we have with our clients is based in their financial plan. That's how we can help them decide how much they need. So we've got some tools, general rule of thumb. I think people say, well, you should have about 10 times your income. But we can look at things. What if you want to pay off your mortgage? Or what if you want to pre-fund your children's college education, whatever it may be, right? We can look at the different scenarios. And that's where maybe even sometimes this combination approach can make a lot of sense, depending on the goal. Do we just need a cheap term solution or that more permanent solution, right? And then inside that world, there's all sorts of other things. But I don't know, we need to get into the details today, but I recently was working with a client who, that's exactly what he thought. He thought, I know I need more while my kids are young, but I want to make sure that if something does happen to me 30 years from now, 40 years from now, that there still is some cash that my family is able to access quickly. And, I guess as an added benefit, it comes tax-free, right? And so we're really trying to focus on that plan, figuring out what's going to be the best solution for that client.
Yeah. And the beauty of the world that I operate in, and you in turn operate in too, is that we work with over 20 different life insurance companies, and all of them have strengths, and many of them have weaknesses. But it's great to work with that many companies, because what we are able to do is like, if you use that client as an example, is we can custom fit a solution to their situation. And if that's what they want, they want to leave a legacy behind, but they also want to protect their income, we can definitely design a plan and help you design a plan that'll fit them perfect.
Yeah. And maybe counterintuitively, what I'm seeing, and I'm interested in your perspective on this, is that oftentimes our higher net worth clients are the ones who are spending the most money on insurance, which, in my mind is a little bit backwards, because they've got other assets and things. But I think they just to a certain extent, there's some leverage that you can get off your dollar if you approach it the right way.
Yeah, no, you're 100% right. And what I think you're referring to there is a strategy that a lot of our higher earners utilize, and we've seen this strategy be incredibly popular for a while now, and that is basically utilizing the feature within a life insurance policy whereby you can access the policy's cash surrender value as tax-free loans. Generally speaking, what we'll see some of our higher earning clients do is they'll really look to overfund a life insurance policy during their peak earnings years and try to build up that cash surrender value as high as they can. And then when they retire, or whenever they want to, they want to access the cash surrender value within that policy as a tax-free loan and help that supplement the retirement income. It's a strategy, like I said, that's been very, very popular with higher earners for years now. And we do see a lot of business in that area.
Yeah, I'm glad you brought that up, because that's one of those things that needs to be managed and thought through. And that's where what I've seen with a handful of clients, that's where they started, not realizing, hey, there's going to be surrender periods. This is really, if you're trying to, you really give up access to your money for 10 years or so. A lot of the, most commonly that 10-year surrender period. So they ended up, whoever they spoke to originally just said, you've got $1,000 extra a month to save. Let's just put that all in the insurance policy. But it really can be a strategy that works, but it takes some time and some massaging and making sure that, you're not overinvesting there. Similar to, we want to be diversified across stocks, bonds, real estate, et cetera. Insurance, fits into that bucket, and just making sure we've got the right amount allocated there, because it's not as flexible, right? That's, I think, what gets missed oftentimes is this is it. It's a solution that can work, whether it's, depending on the product, there may be floors and caps to the investment rate of return, or, depending on what we're doing. It's just more complicated than, hey, put your money here, and this illustration says it's going to grow at 5 or 6% or whatever percent every year. And in 20 years, you open it up again, right? It takes a little bit more monitoring than that.
Oh, 100%. I did a call with another one of my advisors, and he asked me to jump on a call with one of his clients where we were talking to him about this strategy, the overfunding of a life insurance policy. And what I told this advisor's client, and what I share with a lot of my advisors, is if you were to invest a sizable amount of your portfolio into a bunch of mutual funds or some separately managed accounts or some ETFs or whatever it might be, you wouldn't dream of investing a sizable amount of your portfolio in those investments and then walking away and never looking at them again until retirement.
Right.
If you had 15 years to retire, you would never dream of that. Most people check on those things daily, or weekly, or monthly, whatever it might be. You have to treat your life insurance policy the same way. And a lot of times we're talking about a sizable amount of money from a premium standpoint, and then also a very sizable amount of money from a death benefit standpoint. every single year at the anniversary date of that policy, you absolutely have to sit down with your financial advisor and go through it. You're doing yourself a disservice, and people that don't do that oftentimes get themselves into bad situations later on in life, right at the time that they can't afford to get themselves into a bad situation.
Right.
So,
yeah. And I think that's why, certainly our approach, and I think a lot of people's approach has shifted to that more, let's just buy the cheapest thing we can do and invest the difference, because it just keeps it a little more simple. But there are some powerful things that you mentioned, right? The sort of the tax treatment of those dollars can be really powerful if it's managed effectively, where like you mentioned, you can take it out tax free. And then once you start taking it out, again, it requires even more monitoring to make sure you don't run into to any issues there. So it does get really complicated, but that's why, like you're mentioning, with our clients, we want to take a look at that stuff as often as possible, including it in their plans, so that we never get too far off base and get to a point where it can't be rescued, or it becomes really expensive to get it back to maybe where clients thought it was going to be originally.
Yeah. No, you absolutely have to. And it's, I mentioned it a few moments ago, but the vast majority of policies, unfortunately, that are purchased by clients really aren't monitored by the financial advisor that sold it and by the client themselves. So it's something that's completely necessary, and I highly recommend.
All right. In the last few minutes here, I want to just touch on a couple things. And like I mentioned, we may end up having to do some more episodes on this, but one of the other places we've seen a lot of traction with and a lot of use for life insurance is going to be with business owner clients. More often than not, if there's multiple owners of a business, they're going to have some sort of agreement between the two that says, if you die, this is what happens, and vice versa. Right. But what we're finding is a lot of the time they have these documents in place that says what to do, but there's no money to make it happen. So that buy-sell planning is really something we're starting to focus on, making sure that business owners are protected that way. How much of your business would you say is business owner related like that?
Yeah, more and more every day. I think that you bring up the scenario you just brought up with business owners that might have a partner is very, very common. Oftentimes they have an agreement. Maybe the agreement's outdated. Maybe they don't have something to fund the agreement, just like you mentioned. Sometimes they don't have the proper beneficiaries for the life insurance policy that's there to fund it. There's all different types of
I'm
issues.
Sorry to chuckle there, but I can't even tell you the things we've seen with ex-spouses or just other things like that just get missed, right? And that it just it's interesting to see, because as we mentioned on previous podcasts, people are doing different times for different reasons based on different advice, and then they do it and they forget to go back, right?
Yeah.
So
it's common. We see it a lot. And to get back to your initial question, I think the carriers, in particular, the larger carriers, really see the business owner space as being vitally important. And just that there's a number of ways that life insurance can assist business owners, whether it's to fund a buy-sell or to help them with retirement income, or to maybe insure some of their key employees that are so vital to a small business. The tools and resources that are at your disposal as an advisor from the carriers is just tremendous. And I've seen that area grow by leaps and bounds just within the last 5 to 7 years.
Yeah, it's certainly something that's becoming more and more important to us as we're working with those clients, making sure that all of their foundations, all their bases are covered, right? We always, from a planning standpoint, we're building a foundation for the what ifs. What if I die? What if I get disabled? What if I get divorced? What if I sell my business? Or what if my business partner dies, or whatever it is, right? Life insurance can fit and help with a lot of those objectives. And that's where, again, why I wanted to have this discussion today is, what are the uses for these permanent products? What are the uses for term? How can they fit? And how do I make sure I've got the right one because I bought some when I was young because it was cheap, but is it still the right fit for me today? And so that's, I appreciate you coming on today to talk through some of those things. And, like I said, there's certainly a lot of other areas we're going to want to get into in future podcasts. So thanks for listening today. If you have any questions about if you have the right kind of life insurance or you'd like to learn more, please check out our website, wittenbergwealth.com, or you can text me 801-839-7056. Please remember to subscribe to the Wealth of Insight podcast and share with your friends and family. Thanks.
Thank you for listening to the Wealth of Insight podcast. Click the subscribe button below to be notified when new episodes become available. Securities offered through LPL Financial, member FINRA SIPC. Investment advice offered through Stratos Wealth Partners, a registered investment advisor. Stratos Wealth Partners and Whittenburg Wealth Partners are separate entities from LPL Financial. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Whittenburg Wealth Partners. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.